Hi, I'm Roy Robertson. Welcome to Good Business San Diego, where we're talking to local business leaders who are making a positive impact in the community. The following portion of Good Business San Diego, sponsored by Wilsey Asset Management. Today we welcome back Brent Wilsey, the president of Wilsey Asset Management. And we're talking about what to do when your investment is down 20, 30, or even 40%. Hey, they can't all be winners, right, Brent?
That's
it happens.
right.
So let's talk about the options. And if it's down that low, do you just dump it?
Well, and that's the thing. People think, oh, it's not going to happen to me. I've got Apple, I got Amazon, they've got all these things thinking, not going to happen to me.
Right.
Well, we go back in history, and we're talking for 2025. Some stocks are up dramatically. There will be people that lose on their stocks 25, 30,
right.
40%. It's going to happen. We go back in time, we talked about cannabis. People said, Brent, you're wrong. You know, cannabis is great. No, they lost about 90% of their money. We talked about Rivian. We talked about Peloton, all these ones that lost so much money. It's based on what you're looking at. And the problem that people do is they get so into the emotional hype of investing that, again, the first thing they do when they're down, they just want to forget about it, so they sell it, and I don't want to think about it again. But you're going to think about it, because then what happens, we do have this thing called 19 thoughts to trading, that you buy when you should be selling and selling when you should be buying. It's going to happen to you. So you sell that investment based on emotions, it's not going to work out well for you.
Intellectually, you just have to be prepared. Hey, this could happen to me.
Yeah.
Another strategy that people will use, and I'll have you explain this, is dollar cost averaging, which is buying more when it is down, right? Yeah,
and dollar cost averaging is something that can be very good for people. I mean, because it's where you have maybe like an investment, you put in $1,000 a month every month, price goes up, you get less shares, price goes down, you get more shares. So it can work pretty well. But now that you're down 30 or 40% in the investment, you're thinking now is the time to do dollar cost averaging. And maybe it is, maybe that is a good strategy, but don't do it just on emotion because you're trying to fix the problem because the emotions are very hard. When you make money, you lose money, the emotions are twice as bad when you lose money as when you make money.
Right.
So dollar cost averaging can be good, but not if it's a terrible investment. Not if it's a sick investment, that's not going to come back. So don't just say, well, this is a plan. It may not be a good plan.
You talk about the emotions that are involved, and it's really hard to extract yourself from that. It's an emotional situation. You're talking about your money, you're talking about your future. Do people take enough time to sit back, take the emotions out, and just review the fundamentals as you do? Well,
that's what they should be doing, and it's hard to do. And I say check your emotions at the door, because that's the best thing you can do. Step back and say, okay, what is this investment I have? Start looking at the fundamentals of the investment. You want to look at things like what you're paying for the earnings of that company. What about the cash flow? What about the book value? All these important things that tells you what this investment is really worth. And then you want to take a look at what is the book value of this company and the debt. Is the debt to equity too high? High debt company could go bankrupt. If they have no liquidity, current ratio, no liquidity, that could be another problem. So look at all these fundamentals and look at what the earnings based on the analyst estimates are going forward. Are they going to be earnings? If not, and you're down 40%, you should cut your losses and get out, but make a good quality decision based on the fundamentals of what you're investing in, not just on emotions, because our slogan at our office, our company, no emotions, just results, because it's paid off well. I've been doing this for 40 years. We do not have emotions, and we've had companies that have dropped 30, 40%. Sometimes we cut our losses and sell. Sometimes we'll say, no, this is a great buy. Let's buy more of it. So that's what you have to look at, the emotional side of it.
You have to be prepared for everything. And do people really have the understanding to evaluate the fundamentals? And I know that's where you come in.
That's what we do. And sometimes it takes many hours to understand that. You got to listen to the conference calls, what's going on with the business. So you have to take time to understand the business you're investing into.
Right, appreciate it. Brent Wilsey, Wilsey Asset Management. You can find out more by going to smartinvesting2000.com or call Brent 858-224-0004. The preceding portion of Good Business San Diego, sponsored by Wilsey Asset Management, and we will be right back.